It's going really well. It is somewhat new that buying a mine that you can't actually visit. We were very fortunate that we signed the deal on the 26th of November last year, and we've done extensive due diligence. Newmont were very hospitable in letting our teams on site after we'd signed the deal, so post the due diligence. And so we've visited there several times. I've been there twice, and members of our team have been there a number of times. And we were on site until the lockdown in early March. Two of our colleagues have actually stayed there and agreed to stay on site during the pandemic. And so we know the site well. We've been using technology effectively, and the site has really, the site has really embraced the changes that are being made. It is a turnaround opportunity. I think one of the fundamental things that we've seen, or that attracted us to the asset, was the geology and the transformation opportunity, and both of those are exceeding our expectations. We're really excited about the geological potential, and the site is really embracing the changes which frankly needed to happen some time ago, and we're only implementing things which should have probably been done a while ago, because the site cost structure is definitely set up inappropriately for the current production rates and the potential for going forward.
And could you give us some examples of how you're managing?
Managing
to put those changes into place?
Yeah, so I think I've described it as it's a software issue and a culture issue that we're really needing to affect rather than hardware. The geology is great, the infrastructure is very good, but it needs to be rationalized and transformed, and it needs to go through a rebuilding phase, because the way it was being run previously, it was really headed towards closure in the next in the short term. And I think the team on site knew it, the people who were working on the site knew it, because there'd been a depletion of the mineral inventory as there'd been a lack of spending on exploration and development. So you depleted the mineral inventory that was there. And what we're trying to now do is go through a rebuild phase, rebuilding the mining stocks. So that means a lot of geological drilling. 4 drill rigs are operating on site, and we're planning to increase that. Development rates are increasing. They were at like 500 meters a month, and our near-term target is 1,000 meters a month. So we really are progressing things to build a future. That includes the rationalization of the workforce. This last week, we made the difficult decision to downsize the workforce by over 100 people. That brought the workforce down from what was 900 people when we signed the deal, over 900, to now just over 700. So we have reduced the cost structure there as well, and investing in the future. And those are the things that we believe are going to be critical to building the foundations for a long-term, profitable and safe mining operation there. And it's all going well.
Well, it's good to hear that it's going well. Has COVID delayed your initial expectations too much?
I think there'd be some people on some of our sites that COVID has actually been a benefit, that we haven't been able to visit the sites, or I haven't been able to visit the sites.
You haven't been able to.
So with Red Lake, we've used virtual technology. We've used these virtual meetings. Our team is engaging with their team on a daily basis. It's worked well. The integration was officially ended last week. So we've achieved everything we want to do with regard to integration. And we're now into what we describe as business as usual, and the real transformation, the long-term transformation. We've said it will take 3 years. Things are progressing faster than we expected and better than we expected. And I would say, you always get an anxiety when you acquire something, and this is a new jurisdiction for us. It has a somewhat skeptical view within the investor market, because it has had a troubled last few years as the stocks were depleted. But everything we've seen since we've acquired the mine has only amplified our view about the potential and opportunity at Red Lake.
Well, it sounds like it's been keeping you busy, but it sounds like you've had a few different things on your plate at the minute. You guys have 6 to 8 assets you like to have, but you are obviously at the lower end of that at the minute. does that mean we should be expecting, some new appetite or some new announcements from you on the buy side? I mean, this is a specific question, but also a general question because, as we've mentioned, there's no travel really that's going on with COVID, so maybe that's going to be impacting deal making in general at the minute.
Yeah, we demonstrated that you can overcome that because we sold Krakow a couple of weeks ago, and that was done virtually, drone technology to take people through a site visit, and that worked well. So we were happy with that sale. And we've always said, we want to be a company that looks at margin rather than volume. Krakow was an asset with a short mine life and wouldn't have competed for exploration dollars when you put it against a Cal or a Red Lake for us. So Aris, the new buyers, they said they'd commit to spending $13 million over the next couple of years on discovery there. And we thought that, that's probably what, wouldn't have made it through our hurdle rates with regard to exploration spending. So I think deals can be done, certainly complicated. I'd say probably the higher hurdle rather than the lack of access due to COVID is the prices, $2,500 an ounce of gold in Australia. We are in very good times as gold companies. We are at Evolution, we're making lots of money. And one of the benefits of having a portfolio that now includes assets like Cal, Red Lake, Mungari, and Ernest Henry is that the hurdle gets higher and we need to look for better and better quality things. So we're very active and we're always open for business.
Yeah, sounds like a difficult problem to have. You mentioned Cal. We know that you're going to go underground there, right, at the end of the year. Is that still on track? And can you offer any color on how big a producer that might be?
Sure. So Cal, we're not going underground at the end of the year. We're exploring at the moment, but the underground ore body is 2.5 million ounces at our last update. It's open along strike and at depth. So it's given us one of the really good problems in the mining industry to have, that you don't know how big the ore body is, but it's definitely bigger than the 2.5 million ounces. So we're grappling with how much do you explore versus getting into production, because we want to take Cal to over 300,000 ounces of production. It will do that for a long period of time. One of the things that was kind of seen as as an item of...
Sorry, I think we're getting a little bit of a wrap up here. So.
Oh, well, okay, no worries.
So I guess I'll have to say thank you. Thank you for your time today.
No problem. Thank you. Thanks, Melanie. Thanks a lot.
All right.